Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and we saw a little bit of a move down late this afternoon. Where'd we go? Kind of back to where we were at the beginning of yesterday. So we had a little run up yesterday, only to roll over, making a very pretty, actually, here, little kind of a semicircle. Look at how nice that looks on the chart. Now, it does give us a little opportunity to trade the indices, but only late in the day. I'm really still waiting for more major breaks of 10.9, actually about 11,000, up and over 11,000, and then back below 10,700. Could have maybe tried to trade this below 10,840 or so for, 40 points coming into the end of the day. We did get some good acceleration. I did send out an email to my subscribers kind of showing them where a good break of today's charts were at. But it really didn't make for any major trading regardless. It wasn't like, oh, hey, we caught a huge move in the markets or anything. But you can still see, and I'm just going to call it what it is, this is still kind of a consolidation mode right in through here. Now, from a bear standpoint, you love to see that these overhead resistance areas held today, especially 10,900. It just beat its head against that ceiling all day long and was never able to break through. Finally gave up the ghost end of day, but looked like it was poised to push itself higher before the rollover at the end of the day. Fridays now, watch it carefully coming into Fridays. We have had movement on Fridays, some of it up, some of it down, but it's regardless, it has been movement, giving us something to at least trade. So be watching tomorrow for some intraday moves. Now, whether or not you want to hold over the weekend, guys, up to you. Kind of a shot in the dark here. Remember what happened last Monday. Mondays have typically been good to the markets, and it was very good to the markets this week. But if you just look at the bigger picture overall, take a look at the daily, you can see after our gap up on Monday, it's just been sideways. We had that huge gap up on Monday, and then we really haven't gone anywhere since then. Uh, on the chart standpoint, the 50 didn't really work so well necessarily on the Dow. Did hold this 10,950 area up here. 10,920 was the high for the day, so holding kind of this 20-day moving average, not really touching it though. More importantly, 10,900 was really the area to get up and over, and you can see how well it held coming into today and all through today before finally giving up the ghost later on. The NASDAQ on a 60-minute also doing the same thing, kind of dropping back down today. Whereas the NASDAQ was the leader up yesterday, it was the leader down today in the markets themselves. Coming back and sitting on this 50-period moving average. Very, very logical place to stop, take a bounce, and kind of resort where it's going. What am I looking for? Still really a push above 2,000 or a push below 1920 are my areas to get short. If you want to take something before that, you feel comfortable with what you're doing intraday, great. No problem with that. But if you want my bigger levels, I would start looking at this 1920-ish area and then above 2,000 for my area to the upside. NASDAQ on a daily, you can see once again the NASDAQ showing the gap up very nice. Here was the move to the upside, stopped here for the day, move sideways, move up, move down. Ultimately, what are we looking at, guys? Sideways. If you're a swing trader, this is very, very difficult trading right now. Very difficult trading. We have had a couple of days, yesterday's up and today's late day move down, giving you an opportunity to maybe play a little bit in the indices themselves. But overall, this is all choppy action. You are better off kind of sitting on your hands if you're a swing trader here than trying to jump in, jump out, jump in, jump out. You're going to get your hand slapped quite a bit in this type of market. This makes it very difficult, though, for those of you that like to, trying to make profits every day. Because, look, since Monday, we haven't gone anywhere. It's been very difficult to make profits all week long. Now we're already into Friday. It's pretty much a wasted week from a swing trader's perspective of trading. Weekly basis, now we have tomorrow, but look what happened with that move down today. We're holding that overhead resistance. We're holding that blue line. This is the stuff to watch coming into tomorrow and tomorrow's close. By the end of tomorrow, we will have this candle filled out. We'll have a better idea of where we're at. But as long as we're below this area, I have to remain neutral in the bigger picture, but still kind of now neutral to maybe bearish in the shorter term going forward here if it'll hold that area. Staying below these heavier levels of overhead resistance remain a bearish look for the markets. 60 SPX 60 minute also rolling over here. This 1175 holding very nicely. 1175 to 1180 was my big area of overhead resistance. Held beautifully today, giving us an opportunity late in the day to maybe get in if you wanted to, but I'm ultimately looking for a break below 1150 or back above the 1180-ish area for my entries, long or short. Daily standpoint, same thing. Look how beautifully the 50-day held. Gorgeous, simply gorgeous here. This is great. Holding very nicely today, 1174 here for the 50-day, and a high of 1173.57. So very, very nicely done by the 50-day moving average, giving us very strong overhead resistance. I'll be watching that very closely. This 20 is rolling in about 1181. So if you want to kind of squeeze your entry up to about 1185, not a bad idea. Actually, probably a little bit more safe even in the longer run if it can get up and above 1175. Otherwise, we could be looking at what? A 1, 2, 3. This is still 4 before a 5 down, if you're an Elliotician. Or it is an ABC with now a 1. Maybe this is the start of a 2 before a 3 back up again. Still anyone's guess. I'm really not all that concerned about the Elliott wave move right now, but it is nice to watch. I'm still waiting for these bigger levels to break, 1150 and or 11, let's call it 80, 1185 for a more conservative long entry before I really start throwing money at this market again. From an indices standpoint, there have been stocks that have been moving nicely and given us good trades. SPX on a weekly, you can see it did push itself back up again above the 20-day moving average, at least for now. Once again, got to wait till tomorrow to see where this closes. I would not expect us to get back up and above this week anyway to this blue line. That blue line is sitting about 1200, so it's got a lot of work if it's going to do that. It's going to take it a while, like I said, at least a couple weeks to get back up there. VIX on a daily showing a little bit of life today, but ultimately for the week we're right back down within this range, still in that quote-unquote I'm going to call the yellow zone. Let's just call this 23 to 30 area the yellow zone. We'll call anything below 23 the green zone, and anything above this area the red zone. How about that? Yeah, that's kind of cool, huh? Gives you a better idea of what we're looking at. So VIX kind of in a yellow zone right now, where the investors are still trying to figure out where the market's going to go next. This will show us the fear gauge as we move forward. Apple on a 60-minute now was down $3.73 today, pulling right back into what? This very nice